Warren Buffett spoke for almost 6 hours straight yesterday and fielded questions from folks at the Berkshire Hathaway annual meeting, okay? 2 videos I want to react to in this one, okay? First one up here is quite interesting. Warren Buffett and Charlie Munger almost get into a little debate argument on stage here. I think this one was really intriguing, and it's interesting kind of hearing folks that are in their 90s, because if you didn't know, Warren Buffett's 92 years old, Charlie Munger now 99 years old, and interesting hearing them kind of debate a little bit here in this one about cash and what the Fed's up to, and Charlie Munger's views versus Warren Buffett's views. So fun one there, okay? Second video I want to react to is this one, okay, where the gentleman basically asks Warren Buffett, are they interested in buying something like, obviously, like a Tesla stock, right? Like an EV type company like that, like maybe a NEO, something like that, right? And I hear their response in regards to that, because I think it's an interesting subject, right? Because this gentleman's basically pointing out that the whole market's going to the EV wave, and obviously there's a lot of companies building out in that space that have become big ones, specifically, obviously, Tesla. And so we'll hear what Warren Buffett has to say in regards to that. I appreciate everybody joining me, as always. 26,500 plus subscribers on the channel. Thanks for being here, folks. If you're looking to apply to join my private stock group, private wealth group, check out the description area. That will be to fill out a form down there if you want to apply to join us in there and be part of that. Alrighty, guys, let's get into this.
It comes from Lindsay Peter Schumacher in Cedar Rapids, Iowa. Does the current size of the Federal Reserve balance sheet concern you? In particular, the result of quantitative easing. The Federal Reserve expanded its balance sheet out of nothing. The net effect, in essence, is a form of single entry accounting, creating something of value out of nothing other than a series of book entries, and wondering what Mr. Munger thinks about this as well.
Well, I don't think the Federal Reserve is the problem, and I think they can't solve the fiscal problem. I do not worry about the Federal Reserve, and I think it's fulfilling the functions for which it was established. I probably would not have been. They have 2 objectives, and I would not have been one probably that would have changed the inflation objective to 2% a year from 0. I think that I think that if you tell your people that you're shooting to depreciate your currency at 2% a year, that has a lot of implications, although it feels good to a lot of people. A lot of people want a little inflation, but nobody wants a lot of inflation, except somebody's got a lot of debts.
Boom.
And
boom. And who's got a lot of debts? Think about this. Who's got a lot of debts? Okay? I'll tell you exactly who's got a lot of debts. 1, obviously wealthy people, right? Wealthy people always carry a lot of debt. They also got a lot of assets, but got a lot of debt. And so, let's say you've got a $10 billion real estate portfolio, for example, right? You got this $10 billion real estate portfolio, commercial real estate, and whatever, residential, towers, or whatever, right? Okay, great. And let's say you're probably going to have that on a bunch of debt, right? But all you really care about over time is that $10 billion of debt you have, right, in terms of the assets become worth $20 billion, and then $30 billion, and $40 billion, right, and then $50 billion. That's what you care about. So obviously, over time, things kind of growing and growing, inflation is kind of good. Who else has a ton of debt? Think about this for a moment. The U.S. government. Governments in general have a ton of debt, right? But obviously the government has a tremendous amount of debt. So, one of the reasons the government could actually secretly want to push inflation during certain time periods is specifically after a time period when you, let's say, print a lot of money out there, okay? And obviously you create a lot of money that might not have been there before, and you can do that many various ways. One is obviously through stimulus payments, but there's a million other ways you can do it, right? And so naturally, if you can, I don't want to say you can inflate that debt away, but if the numbers just become much bigger over time, then they kind of dwarf what other numbers you have, right? Imagine you're a company, right? And imagine you have a 50% profit margin. But let's say whatever happens, like over the course of 2 years, your cost of your product doubles, so you double your price, right? Well, now, even if your profit margin stayed the same, right, 50% profit margin, obviously the dollar amount for your revenue and your net income is going to look dramatically bigger just because of natural inflation, right? Now, there's a bunch of dislocation in that short-term period that, you don't raise prices fast enough, and there's a bunch of problems that come with that. But once The dust is settled. All of a sudden it looks like, oh, this is grand. We just doubled our revenue. We doubled our net income, right? Oh, this is beautiful, right? So this is just something to keep in mind. And so, Ron Barron, I wish they would let him expand more on this thought in the past, because Ron Barron, who's a very successful, famous investor, touched on this one point and how it's all part of the plan, essentially, to have this inflation right now. Then we'll wither it down, and then it won't be a problem. But meanwhile, everything got much more expensive. Everybody's, revenues can look better, and this can look better. The debts can look smaller because then maybe GDP is a lot bigger. Think about these things for a moment, and all of a sudden you start to play it out, and you're like, oh, this is just one big game of chess.
I do not worry about the Federal Reserve balance sheet. I enjoy looking at it, and the numbers are big. I always like big numbers, but it is not. It's interesting. One of the most interesting figures to me is currency in circulation. I mean, it is gone. They were saying cash is trash back in 2007 and 8, and all of that cash is going to disappear. Well, if you look at the Federal Reserve balance sheet, it's gone from $800 billion to $2.2 trillion. And most of that's in $100 bills, overwhelmingly. And if you figure it out, I think there's about 50 $100 bills per person, babies, everybody in the United States. And I would really like to know where all of that is. I mean,
Warren Buffett wants to know where all that money is. He wants to know where all that dang money is. Even Warren Buffett, he's like, I don't even have that much around, man. Where's all this money at?
Hoarding euro dollars, in South America or Africa or wherever. And the demand for currency now, it's some of it maybe used to be settled drug dealers' activities and all of that. But anybody thinks cash is trash.
Charlie Munger's like, what are you talking about, Warren? What do you know that I don't know here, huh?
Ought to look at the Federal Reserve balance sheet, and actually you can look at how many $5 bills and $2 bills and ones and all that, and the action has been in $100 bills. I mean, it is just astounding the way that $100 bills have spread, and of course I don't know where they are. And I don't think the Fed can know exactly, but they probably make a lot better guess than I could. But I do know it's happened, and you can watch it every week, and you'll watch currency in circulation probably grow a little bit. And believe me, cash is not trash. Charlie?
Well, I don't know where we're headed with all of this. It's been very extreme. I think that you could be pretty extreme in fighting depressions and so forth if you reverted afterwards to a period of some discipline. But if you're some discipline, but if you're going to just keep borrowing, printing money and spending it, I think eventually it causes bad trouble. And you can see it in Latin America. Latin America let its currency get out of control all the time, and of course it lagged the United States in economic achievement greatly. So I think we pay a price if we ever give up our old ways entirely and go into a new world where we just try and print money to make it easier to get through the year.
We paid a price in World War II. I mean, everybody, school kids and everybody else, myself included. I mean, we bought what were originally called war bonds and defense bonds and savings bonds and all that. But from 1942 to 1944 or 5, you paid out $18.75 and you got $25 back, and every kid saved savings stamps and all that. But when you got all through, you had 120% of GDP in the national debt instead of 30 or 40%. And we had a lot of inflation subsequently, a lot. So the people that bought those bonds and supported the war had a portion of their purchasing power taken away from them. Well, Well, there wasn't anything wrong with that particularly, but when a country gets in the habit of doing that, I think it's tough to figure out where the breaking point is with society, but I don't think you want to come anywhere close to it.
Yeah, but it's also tough to have a mass of people unemployed.
True.
That's the tension.
True.
Yeah.
True.
Well, that's why the Fed has two objectives in terms of.
True. Would you rather have 5% inflation and everybody can get a job, or would you rather have let's say 2% inflation or 1% inflation, and the unemployment rate's 10-15%? So you think about these things, and I mean, ultimately, if I had to choose one, I would choose the 5% inflation, right, versus a 10% inflation unemployment, because like the effect that has on the economy is so devastating. Like you might think, 3%, 4%, 10%, not a big deal. It is a huge deal. It is a monumental deal in how much less spending there is in the economy, how much worse the economy is, how many small businesses just don't exist in that sort of scenario, how many large companies just revenues are far less than they would be in a 3% or 4% unemployment rate. Like, is night and day differences, folks.
Employment and inflation, but they are not the ones that create the deficits. And so far, the system has worked pretty well. Although, like I say, it's been
so far the man who's jumped off a tall building.
Yeah,
is all right until he hits the ground.
Yeah.
Did you catch that one so far? The man who jumped off a tall building's okay until he hits the ground. Oh man, that's beautiful. So yeah, little debate going here in just a moment.
Well, but there could be ways we can stop now at the third floor or the sixth floor. We don't know what floor it is, but we know it isn't having hit the ground. But the question, politically, it's very, very, very tempting to vote appropriations, and it's not fun to vote taxes. And Russell Long, head of the Senate Finance Committee, they got a building named after him now. He said, don't tax you, don't tax me, tax that guy behind the tree. And basically, that is the attitude of, it's the reality of what is useful in politics. And so far, this country's managed to work very well with a lot of things that could theoretically cause a lot of problems, but it doesn't guarantee us the future on it. And being the reserve currency lets us do a lot of things, but it also creates a lot of consequences if we screw it up.
It's true.
Charlie?
Well, we're beating a subject to death, but it is a problem. I wish we had a solution.
Yeah, man. I think some of their views are probably similar, but I always feel like maybe Munger's a little more anti-Fed, and I feel like Buffett's a little more pro-Fed. Obviously, Buffett's just a little more optimistic and looks at things with a little more of a optimistic lens, I guess you can say, than somebody like a Munger. Like Munger's, definitely much more of a pessimist, I guess you can say. Especially if you compare him to Warren Buffett. He might be less pessimistic than, I don't know, maybe an average person, but I don't know, he might be more pessimistic as well. But just Warren Buffett just always has more of an optimistic tone, more of a, I think they're doing a good job. I think they're doing the right. I think they're making the right decisions. And it seems like Munger's usually a little more anti. So just difference in personalities there and thought processes. Okay, let's get into Warren Buffett here and see if he's interested in, let's call it some of these EV companies, maybe a Tesla,
Looking at the global trends, it increasingly does seem that zero-emission vehicles may have finally reached the cusp of mass adoption. Do you see any opportunities in this space, either in specific vehicle manufacturers or in related technologies?
Well, I would say that Charlie and I for long have felt that the auto industry is just too tough. The Ford Motor Company, Henry Ford looked like he owned the world with the Model T, and he brought.
Right, before we go any further, okay, I think this needs to be said, because obviously Warren Buffett owns Apple, right? Apple, how do they make almost all their money, for the past 10, 15 years? From selling iPhones, right? From selling a cell phone. Now, the cell phone business, before it became a smartphone business, was not actually a good business model. And it was always just a fight to the end. I don't know if you guys remember, for the younger viewers, you might not remember these times, but anybody that's over the age of 30, and certainly anybody watching this, you might be in your 40s, 50s, or 60s, you remember like the cell phone battles prior to the smartphone era, right? And you could get like a free flip phone, or actually decent phones for free, or for like $99 from, signing up with, whoever the cell phone providers were, AT&T or Verizon or Sprint or whoever it was back in those days, right? And it was incredible. It wasn't normal back then to have to spend $1,000 or $1,200 to get a new smartphone, and then you spent all this money once you got the smartphone as well, right? There was a fundamental change in the business model. So one of the things I think Warren Buffett's missing with the new age business models, and that's fine, you don't have to get everything, but I think he's missing the fact that this is a fundamental change in the way these companies operate. A Tesla is not the same as the traditional automakers were. Their gross margins are going to be obviously exponentially more than what the traditional automakers were. Like, look at what's happened with their gross margins the past few years, and this company's just still at infant stage of profitability and margins, right? Imagine where they'll be 5 years out, 10 years out. And when you think about all the revenue opportunities Tesla's creating when somebody gets a car, that's the other fundamental change I think folks like Buffett and many others are just missing. And it's a change in the entire business model, like we had with the cell phone when it went from just a basic cell phone to then the smartphone era that Apple ushered in. Okay, totally different situation, and you got to look at those companies, in my opinion, very differently.
The price dramatically. He took up wages dramatically. He might have been with a different personality, or some different views. He might have been elected president of the United States. I mean, there's a good book that came out on that recently that told about the story of, it tells a little about Nebraska in terms of it, but Henry Ford and Thomas Edison joining up, but maybe a year or two ago. If you're interested in autos, you ought to read that book. But Henry Ford did that, and and 20 years later, that they were losing money, and they had a guy with a gun in his pocket. I think Harry Bennett, that was running the Ford Motor Company. It was on its way to the junk heap when the whiz kids came in, and Henry Ford II, Hank the Deuce, as they called him, brought in Tex Thornton and my friend R.J. Miller and a few people. But it's just, I've read, I was reading the other day, actually, the 1932 annual report of General Motors. And it's one of the best annual reports I've read. It's a totally honest, assessment of exactly where they were. They had 19,000 dealers then, and the population, as I mentioned earlier, was about 120 million or so. And now with 330 million people, all brands in the United States have like 18,000 dealers or something. It's just a business where you've got a lot of worldwide competitors. They're not going to go away, and it looks like there are winners at any given time, but it doesn't get you a permanent place. Although, as I mentioned, I would say Ferrari is in a special place, but they only sell 11 or 12,000 cars a year, and U.S. last year, I think there were.
When you have I'll push back against Buffett again here, okay? When you have a special company with a special team leading that company, they have a special 10, 20-year span in front of themselves. It doesn't mean for the next 50 years or 100 years, let's look at something like Tesla, they're going to be great, okay? Because you could say the same exact thing he just said about every other phone manufacturer in the world. What he just said there. You can say it about, I don't know, who even makes phones nowadays. I don't know, Huawei, and I don't even know, like because it's not even in my thought process to get another phone other than an iPhone nowadays, right? So you could say that about all those other phone manufacturers, right? And it's the same way as you could say that about all the other auto manufacturers. Tesla's its own thing. They got their own thing. They got their own stuff going on. They got their own incredible opportunities. Their recurring revenue streams is going to be immense over the next 5-10 years, and the way that's going to build out, like the Apple services business built out. Between, all the different programs inside the car you can obviously purchase, obviously satellite maps and whatnot, through things like, obviously, auto insurance is going to be a huge opportunity, the supercharger network, services. I mean, and there's going to be so many opportunities in front of this company in the next 5-10 years that's going to build out, just like Apple's built out all these different services opportunities over the past 5-10 years, right? You look at Apple 10 years ago, they didn't have nearly the services business they do today, right? It just kept building out and building out, and that's what Tesla has. So, I think, in my opinion, Warren Buffett's looking at it from flawed logic, because he's looking at it from trying to put everybody into the same group. And it's you can't put everybody in the same group. You got a freakish company here in Tesla that's different than everybody else. No different than you got Apple that's a freakish company that's different than everybody else that basically sells cell phones.
13 million something. And it's not a business where we find it fascinating to be in. We like our dealership operation. But I don't think I can tell you what the auto industry will look like 5 or 10 years from now. I do think that you're right that you will see a change in the vehicles, but you won't see anybody that owns the market because they changed the vehicle. Charlie?
We have different opinions on that. I think Tesla is going to have an Apple-like market share in the United States by the end of this decade in terms of new vehicles sold. I think you're going to see 30 to 50% of new vehicles sold in the United States at the end of this decade, like 2030, being Teslas. Actually, that's my opinion. We'll see if that plays out, obviously, but that's been my prediction for years now, and it continues to be my prediction. By 2030, 30 to 50% of new vehicles sold will be Teslas.
Well, the electric vehicles
in the United States
coming big time, and that's a very interesting development. At the moment, it's imposing huge capital costs and huge risks, and I don't like huge capital costs and huge risks.
And we're subsidizing it in the United States, and we're actually doing it, putting in a pro-labor time. I mean, it is subject to politics like you can't believe, too, but it's going to be with us. We're not going to quit driving cars, and the American public has a love affair with them. And but I think I know where Apple's going to be in 5 or 10 years, and I don't know where the car companies are going to be in 5 or 10 years. And I may be wrong, but that's
I don't know if I can say where Apple's going to be in 5 or 10 years, because the day the smartphone gets disrupted, which I don't know when that is that 3 years from now, 5 years from now, 10 years from now, 15 years from now? I don't know. There's going to be a day when the smartphone gets disrupted. Whenever that day is, that's going to be when Apple faces a big question, because their entire business model revolves around the iPhone and then the services opportunity, right? And then all the other products they can sell off of that because somebody buys an iPhone, the iPads, the Macs, all those sorts of things. So someday there's going to be disruption there. I can promise you that. I just don't know when that is. So even predicting where Apple will be in 10 years, I think is a difficult challenge.
Charlie and I've followed the auto business with intense interest. Charlie's firm was the specialist in General Motors on the Pacific Coast Stock Exchange, and that was a franchise, wasn't it, Charlie?
Yeah, by working very hard, we could make a minor amount of money.
Yeah. I think if Buffett was younger, I think he would definitely consider making an investment in Tesla. The way I would think about it, if I was in Warren Buffett's shoes today and I was running Berkshire, the way I would think about it is, okay, we have this opportunity to invest. They have $130 billion sitting around. Invest, let's say, $20 billion into Tesla, okay? And through that $20 billion, hopefully it grows to become a lot more than $20 billion over the coming years. But I would look at it from their standpoint as a hedge, basically, right? Buffett talks about, we got dealerships, and there's that whole business model, which Tesla's disrupting, right? You think about the energy businesses, obviously Berkshire owns, and you think about the way Tesla's potentially disrupting the entire energy sector over this next 10 to 20 years, right? You think about, obviously they own a massive rail provider, right? And you think about what Tesla's doing, if Tesla's going to be able to get very shortly here to obviously semis that can drive themselves, right? And you eventually won't even need a driver in them. And you think about how that's going to disrupt potentially, obviously, even the train industry, right? The freight industry. Because if all of a sudden you're talking about a situation where a semi doesn't need a driver behind it, right, which is a huge amount of the cost, and can drive right to a location and dock itself and get ready to be unloaded. I mean, my gosh, do you know what that sort of opportunity that is? So I would just, from my standpoint, if I was Buffett, I'd throw $20 billion in the stock, maybe $30 billion. He puts $30 billion in Tesla stock. You still got another $100 billion laying around, right? It's more than likely going to grow over this next 5-10 years and grow substantially. And it's a hedge. It's a hedge for your business. So just in case Tesla disrupts a bunch of the industries Berkshire's in, Tesla's going to be likely the one disrupting a ton of those industries. And so you'll thrive from that. I think it's a hedge worthwhile. That's all my personal opinion, okay? I don't run Berkshire Money, but I should, okay? I appreciate y'all. Much love as always. Thanks for being here. Thanks for being subscribed. And thank you, Buffett, for all these gems and classics you're always producing out there, even at 92 years old and Munger at 99, man. Appreciate that. We can all hope to be, let's call it, that together in your 90s. Like, it's incredible, right? Most people don't make it to 90, and for those guys to be still on top of their game like that in their 90s is incredible, man. Absolutely incredible. So I appreciate it. Much love as always, and have a great day.